Let's talk a bit more on what could India look like as we come out of this COVID crisis, and what's the expectation on the when as well, because that's really what everyone is waiting for. Axis Capital had a very interesting conference, the Axis Capital Corporate Connect Series 2.0. It has in fact lots of large and mid-cap companies participating, names like an ICICI Bank, Kotak Bank, Lupin, BHEL, Dabur, just to name a few. 350 investors will be participating in this conference that will be starting today and will be going on till the 26th of June. So let's get in some sense of what can we expect from this conference with Kashyap Pujara, MD, Head of Research with Axis Capital. Mr. Pujara, thank you so much for joining us today. Well, for one thing, this conference is going to be different in the sense that you're not going to physically be being able to meet investors and companies participating, but nevertheless, I suppose the internet has saved us from that dilemma for now. But yeah, to start off with, Mr. Pujara, I have given a very, very brief introduction. If you could just sort of tell us a bit more on what we can expect from this conference. Corporate Connect, as the name is, so I'm assuming it will also give investors that rare chance to be able to directly hear from the managements, from the companies as well of these large and mid-cap companies.
Yeah, so what we've done is that generally we have our annual conference during these times, and we've kind of transitioned it to a digital conference. We had a first series between the 2nd and 5th June where 22 corporates had participated. And we have a second series, which is a much larger series today, beginning today, which is from 23rd to 26th, where we have more than 40 companies across various industry segments which are participating in the conference. And you're right, absolutely, that digital is the way to go. We have adapted to a new way of life, and so have corporates and investors. And unlike foreign investors traveling to India to meet corporates during these times, we are actually having a situation where we are connecting everyone digitally, both from Asia, US, UK, and India. And in fact, the overall turnaround from investors has been far more stupendous at this point in time than we normally see during a physical conference, in normal times. So clearly, I think this is the way to go going forward, which is hugely efficient and also cost saving.
And you're hosting this conference as well amidst very exciting times, very interesting times, of course. The COVID pandemic, from which India has slowly started to unlock after companies having to shut down their factories and units for roughly about a month, and then slowly, steadily resume operations. And right now as well, we don't have normalcy in the manufacturing units. It's in shifts. It's in extremely constrained rules and regulations. So to start off with, Mr. Pujara, what is the sense from India Inc.? I mean, I know it's just day one of the conference, and you'll probably have a better sense as the conference progresses, day 2, day 3, as your conversations as well increase. But what's it looking like? I mean, how optimistic are companies sounding about the pace at which they'll be able to get back to normalcy in terms of their manufacturing, in terms of the services they provide to customers and to their other clients?
So clearly, I think what's really happening right now is that depending on industry to industry, there is obviously going to be a varying degree of impact. So in certain industries, which are maybe mainly consumer discretionary driven or automotive, the Q1, Q2 is definitely going to be a tough period, and no one really knows what is the sense of demand, how demand really comes back, what is a new normal like. And obviously in certain industries which are more like staples or telecom, utilities, the pace of business is obviously not going to be as alarming in terms of what the other segments would be. So I would say that the distribution curve as far as businesses coming back to normalcy is a bit different for different industries. But broadly, I would say that the markets, equity markets and financial, real markets are kind of disconnected because corporates are seeing some bit of transition pain as we speak. And obviously, no one really knows what is the next normal like. Do we go back to pre-COVID levels in the third quarter, fourth quarter, or next year? Would it be like compensating and enough wherein we actually come back to FY20 earnings that no one knows. Corporates are not even hazarding making a guidance at this point in time. And what's really happening as far as the market narrative is concerned is that the optimist narrative is playing out in the markets. Investors have placed great confidence, and that is globally, I would say, in the central bankers' ability to continue pump prime and bring about or engineer an economic recovery. While there is a substantial dip in FY21, both in corporate earnings and GDP, investors are looking beyond FY21 and are largely expecting earnings in FY22 to be broadly equal to FY20 levels, which means that they are placing a bet on a V-shaped recovery. And due to high liquidity, what has happened is that the risk-free rate has gone down. And with that, and coupled with positive investor expectations that things will start getting better from FY22, the risk premiums that normally one would have attached to buy equities has kind of gone down. So what was otherwise, maybe last month or a month back, a couple of months back, what was looking out as a fear of panic or, a fear of losing money, that is pivoted completely to fear of missing out. And that's the mood of the market currently. However, I think there is no denying the fact that, vaccine is still some time away. No one really knows what the new normal would look like in a post-COVID world. Global economic recovery would definitely take time. And even though India's GDP growth bounces back in FY22, which I'm sure it will, what's more important to note is what is a trajectory thereafter. And what was earlier thought about as a 7-8% potential growth economy, would we kind of be at a 5% growth economy post the bounce back in FY22? Because we suspect that the slope of the growth could be a bit more softer rather than it going back to 7-8% quickly. So while the economy has opened up, we don't think that the risk of bankruptcies has faded or the leverage consumption will come back to a pre-COVID normal anytime soon. Hence, in our view, we are still sticking to a defensive stance when it comes to our model portfolio at Axis Capital, which we run. And one needs to respect the market. There's no point of me being right or wrong here. While I might have a different outlook, the collective outlook of the market is optimistic. There's no denying that. And I would say that it's better to be more focused on picking stocks from a bottom-up perspective rather than actually second-guessing the market.
Well, if speaking on essentially that whole vaccine bit that you mentioned, I suppose, and if you look at the rally that we've seen in certain stocks that have got approvals for just curing coronavirus, it looks like the markets rather shift their gaze towards immediate cures, as opposed to waiting patiently for any sort of a vaccine to come. And yes, you're right about that disconnect that as well we've been seeing in the equity markets. But yes, thanks so much, Mr. Pujara. I won't keep you away from the conference for any longer. Thank you so much for just giving us that sneak peek into what is looking like going to be a very interesting conference. We'll definitely keep getting you more insights as this one progresses till the 26th of June.